Welcome to our deep dive into the exciting world of IPOs. Today, we will explore why more and more Indian startups are choosing to enter the public markets and also the benefits that they reap from this significant step. The trend of Indian startups turning to a public markets is gaining momentum. But why are these companies making such a move? What benefits do they gain? And how has this decision impacted their performance and long-term strategies? Stay tuned to this video as we try to explore all these questions and to know why startups are moving towards IPOs. Despite some negative press, startups that have already gone public are reporting a positive trend in profitability this quarter. Let's look at some notable case studies to understand this better. To begin with, let's talk about Zomato. In quarter 3 of financial year 24, Zomato reported impressive revenue growth to rupees 3,288 crore and a profit of rupees 138 crore. It is highly up from rupees 36 crore in quarter 2 of financial year 24. Now, what do you think is the key driver to this growth? Well, it is the launch of their Zomato Gold program, which offered perks like on-time delivery guarantees and free deliveries on order above rupees 199. Interestingly, this move attracted 3.8 million members. Next, we have Mamaearth under Honasa Consumer Private Limited. In quarter 3, they reported revenues of rupees 488 crore and a profit of rupees 26 crore. Mamaearth's success majorly lies in their marketing, brand building and extensive distribution. They spent around 40% of their overall revenue only on marketing. They also launched new products and made them available in 170,000 stores all across the world. Now, let's understand the broader economic impact of all these steps on the IPOs. After taking a look at these case studies, we can say that the trend of Indian startups going public has broader economic implications. It signifies the maturity of the Indian startup ecosystem and adds depth to the Indian stock market. For retail investors, this opens up opportunities to invest in high-growth companies, fostering wealth creation and economic development. But what are the benefits that startups really get by going public? And what are those reasons that motivate them to do so? Let's find out in the next section. Well, let us tell you that going public marks a significant milestone for startups. It offers substantial financial resources, enhanced credibility, liquidity for investors and employees, and strategic flexibility. Now let's break down all these reasons in the next section. Firstly, going public provides startups with access to substantial financial resources through an initial public offering or IPO. Companies can raise large amounts of capital that might be unattainable through a private funding source. This influx of funds is crucial for scaling operations, investing in new technologies, and expanding into new markets by acquiring other businesses as well. For instance, a tech startup can use the funds from an IPO to expand its infrastructure, hire new talent, and enhance market efforts to meet national and international demands. Secondly, going public enhances a startup's credibility and visibility in the market. Publicly traded companies are subject to stringent regulatory requirements and transparency standards, which can boost investor confidence. This heightened credibility attracts not only investors but also potential partners and consumers. Consider the example of e-commerce giant Flipkart. Now imagine if Flipkart were to go public, the increased transparency and investor scrutiny could further solidify its market position and attract a broader customer base. Thirdly, an IPO provides liquidity to early investors and employees. It offers them an opportunity to realize returns on their investments, which can be a significant motivating factor for retaining and attracting top talent. Now imagine an early-stage employee of a fintech startup who has been compensated partly with stock options The company going public provides a clear path for the employee to cash in on their equity, rewarding their contributions as well as loyalty. Lastly, being a public company affords greater strategic flexibility. With the ability to issue stock, startups can engage in strategic mergers and acquisitions more effectively. The heightened profile comes with being publicly traded can also open doors to new markets and opportunities. For instance, a healthcare startup with groundbreaking medical technology might find it easier to partner with global healthcare providers and enter new international markets after going public. Public status can act as testament to the company's robustness and potential. As we have seen in the case of Zomato and Mamaearth, going public has been advantageous, providing capital for extension, enhancing market credibility, and offering liquidity for early investors and employees. We can surely say that these companies are not only shaping their destinies but are also contributing to the evolution of Indian economy, fostering innovation and providing new investment opportunities. So if you are also planning to launch IPO for your startup or wish to do so in future, this video will surely help. Thank you for joining us in this exploration of why more and more Indian startups are going public and how it benefits them. Don't forget to subscribe TICE and press the bell icon for more insights to the dynamic world of Indian startup and funding.